On my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Rated Narrow. We're back at it again with another bag talk. Today we are doing an update, 6-month update. We've been fully invested for 6 months. We pilot tested it. Actually, hold on. Yeah, 6 months. No, so we're good. So we started the pilot test. I get really excited about stuff when I test things financially, especially when I'm like restructuring or redoing how my finances are going to work. I'd built my income portfolio up to a point to where I could go ahead and jump off the porch and go fully invested. For those not familiar, the fully invested lifestyle is a fast track to retiring early, fire, work optional, what have you. For me, the goal is work optional. And you do that by going polar opposite. This is an extreme swing the opposite direction of the crowd. Most people invest what's left over, or they create a budget and then invest 10% or whatever, get the company match on the 401k, which puts you into a locked position with your assets so you can't retire early anyways, or pay their house off early, or there's a litany of other things that people do. But the money that goes into their actual liquid investment that they have control over and access to is usually an afterthought. And those of us who are living fully invested, who have bought into that ideology, that methodology, that praxeology, we invest everything first and then pay out of our brokerage accounts or whatever medium we've chosen to invest in. We pay all of our expenses out of that. So for me, that is my traditional finance brokerage account, with a pin in the cap that we are working on transitioning over to, having any W-2 or additional income going to Bitcoin first, and then moving from Bitcoin into paying our bills. Because obviously my overarching thesis is Bitcoin's going to $1 million, and I need as much of it as possible that I can get my little grubby hands on. But I also don't want to have to go to work. So that is a immediate problem that needs to be fixed, especially with gas floating around $5 where I'm at. It's worse for some of you. The option to not leave the house is sounded pretty good. But I wanted to do an update on a 6-month update just to kind of let everybody know how it's going. So we're going to jump right into it. Before we do, I want to make sure you guys hit that like button on the way in, subscribe, leave me comments down in the videos. For those of you whose videos I watch over on I watch everything through my main channel that I comment on. I'll be commenting as the video goes, as long as I have good signal. I'm just saying, like, tap in with me down in the comments. I do read and reply to my comments, all of them. So if you leave me a comment, I'm going to reply to it. That said, let's go ahead. I'm going to actually pull it up because receipts, like we do receipts around here. And G-Money Christmas, we blew over $60,000. Goodness gracious. Oh, I tell you what. The portfolio is over $6,000. That's $60,000. That is crazy. First and foremost, those who have been following my income portfolio, generally the way that I have it set up for my primary income portfolio, I do not have any growth in here. The growth is separate, which we will include as part of this video for receipt purposes, because that is a part of the play. I just don't have my growth portfolio actually to a point to where I want to. I'm utilizing the margin over there, but I'm not utilizing it to like pay bills and stuff. So we'll just put it that way. But we're actually positive, which this is a bull run, man. That's just what happens. But everything that comes in gets paid out of this portfolio. Obviously, you see us sitting right at $7,000. it'll be at about $9,000 by the end of the week or so, because I've got another, as I'm pulling cash out of here, it is what it is. We're gonna be doing what we're gonna do. It's just kind of what it is. So this is a fluctuating deal. We'll be getting paid. So actually, it'll probably only be about $8,000 because we are technically getting paid, but it should probably be floating around 9 until next week, because we'll be taking out our next slew of payments, which landed in the middle of the month this month. And then I think we have a little downtime where I won't be needing to pull out of this portfolio so much. So that way, yeah, we can do our things with that. But here's where I'm at, and I'm actually going to do a video that's also going to break down my positions, the reason they're there, what they're tied to, what they mean, all that good stuff. And kind of go into my ideology on how I have this set up, because now that we're 6 months into this style of existing, I'm starting to feel my way through it. Obviously, we've got our portfolio in profit, which for the longest time I thought was just going to be an impossibility. And, a little bit of extra work, a little bit of active management. And here we are. You hit the bull run, cover call options, you get yourself positioned to get yourself access to some of the growth on that, not just the income. And lo and behold, green numbers. Everybody likes green numbers. Me personally, I don't care so much for this portfolio specifically, but considering I don't have any actual growth in here, this is all income focus, and that's it. I'm feeling pretty good about it. So looking through here, our goal was to get to 60,000, which actually, since this is not consistent, that put us at a goal of about 65. Total market value for the portfolio right now is at 62. Obviously this fluctuates, but awesome. Now, my impressions on the system. I think it's amazing. My financial system has changed dramatically. My asset base, as far as my net worth, assets that I have under management, because we're fully investing, we're investing everything first, has gone into supercharge mode. We're not even 6 months into the year, and we're already knocking out targets for the year at a pretty rapid clip. The only one that is going to be questionable is the paying off the debt, because we expanded so much debt. And that's another thing that we're looking at is that's changed, is how I utilize my debt. So now if I take a massive loan, like for instance, when I bought my car, instead of taking a car loan, which would have just tied a lump sum of debt to the car with a car payment, my car gets paid for out of my brokerage account. So I took a personal loan. I overborrowed, which means I borrowed more than what I needed to pay for the car, and I invested the rest of it, and that's what pays for the car. So every month we have, based off that loan, we've got $1,600 that gets pulled out of this account and goes towards that. As you can see, that play has been amazing. We're pretty much going to be in a space to where I will be probably utilizing a personal loan flywheel every 12 months. So when we get to the end of the year, I will either be upgrading the car, because again, now that I've had that car, I have a collateral base for a trade-in for my primary driver. And when I take another personal loan, I'll be able to pay that loan off. And if I take a personal loan for the same amount, because they've already loaned me that amount, I will have that additional 50% on top of the car value, so I can buy a little bit more expensive car, I guess. Which the loans are only for 2 years. So we're looking at 24 months of managing that loan, which is pretty cool to have the option to purchase a car or put a lot more money into my income machine every 12 to 24 months. So far, in my experience, the way that I'm running my system, my version of this, because I've seen some other people and they seem to have way better paying jobs than me. Basically, everyone in the financial industry has way better paying jobs than me. This is being recorded in 2026. We're recording it in May. I would say probably the next 6 month window one, provided if I have W-2 income, I will have a decent paying job. I have an okay paying job now. And there's nothing wrong with that. It's just the way that I went about it because of my background coming from crypto. I'm a little bit more risk. Actually, I'd say I'm a bit more risk tolerant. So my portfolio ran a little bit more risky. The amount of time is another question that I get put in on this because I consider it a side gig. And I'm like, my side gig kind of sets my target for what my time's worth. And it's about, I'd say $250 an hour because I spend roughly, and this is an over exaggeration, and I'm including me making this content in this to kind of bolster it, because when I make the content, especially when I'm showing receipts, you know, I am looking at my portfolio. It does force me to be accountable for the investments that I am making. Obviously, this is not financial advice. This is financial entertainment. You guys are watching me win or lose on my own sword. I speak my books. I don't talk about stuff that I don't know about, and I don't make content just to make content. I make content to document my journey. So, including that time, I spend about 3 hours on this portfolio. I do look at it throughout the day because I like seeing how the market's doing. And sometimes I am pulling profits off positions so that way I can reallocate as needed. Because one of the things that I have learned is, you know, position size management. We like to be sitting around a certain thresholds. And you know, for me, that's one of the things that I look into to keep this moving in the right direction. We also have like a lot of we've started adding in a pretty good grip of more stable positions, which is pretty cool. That's been one of the important things that I've seen. When I first started, I had more of an emotional take. I was doing a lot of positions that I had high conviction in, and it was more or less the conviction than the right timing. We've made adjustments on that. So like a lot of stuff, I'll transition out of positions into better positions for different times in the market. The system that I'm currently running, I kind of feel like I got my legs underneath me during a bear market. And, you know, now we're seeing the reflection of that during a quote unquote bull market. I'm not super excited about it, especially for this portfolio, because as long as I'm getting paid, it is what it is. Things that I would do a little bit different is another question that I've had as I was getting prepared to make this video. You know, I had a couple of people tapping in with me and I'm kind of taking it on conversations that I have with people when they hear that, oh, you live out of your brokerage account. I'm like, yeah, I live out of my brokerage account. I don't even look at my paychecks most of the time until like I see an amount of money hit the brokerage account, and it kind of is what it is. It just needs to be invested, and that's what we do. We, you know, every other Friday, I got a little bit of money to disperse. And then if I take loans, now that I'm taking loans differently, those loans I actually put into my financial system first, and I pay off the debt a little bit slower. So the debt consolidation cycle that I normally do every year, we didn't do that this year. We actually took the debt consolidation money and cycled it into my portfolio if I had the option to get cash. So we had about $23,000 get infused into the system. And that was during the bear market. Again, like I was doing this when the market was bad. Like the market has gone up since we made those moves. We are benefiting from that. We also are leveraging some Bitcoin, doing some experimentation with that. everything goes into the system first, and then the system pays for all the stuff. System being the portfolio, the traditional finance portfolio. So this is the income portfolio. We're doing pretty good. And then we have our long-term holding portfolio. Let me pull that up as well. And one of the things that I would do different is I would have these moving forward on some of the other portfolios. You'll see these blended for portfolios that I'm going to exist out of. So this being one, the other one will namely be my Robinhood portfolio. I'm also going to have a specific bill pay portfolio that will be one of my Schwab accounts as well. But my Robinhood portfolio will be a culmination of everything we learned in the Schwab portfolio, my daily driver portfolio, my walking around money portfolio. And that will have a mix of growth and dividends together. But as you can see, our long-term holding portfolio, we're up 41%. The market finally turned for us, and we got things set up the way that they needed to be. We have a little bit of margin in here, and what we do is I'll normally take about $500 to $1,000 of margin as this margin gets paid off to kind of front myself on getting into some of these positions. So right now we're working on Bitminer. So once we pay this down, we got $145 left. Once that little bit of margin gets paid down, we'll be buying another large chunk of Bitmine. And then we'll probably begin adding in our 21 Capital additional shares, because I do want to get some more shares while it's under $9. So we're going to be looking at getting some more 21 Capital shares accumulated as well. Overall, this portfolio has been amazing. This is supposed to just be growth to supplement our primary income portfolio. So that's both of those. I'm going to go back into the income portfolio here. What else am I thinking about here in regards to this portfolio? Because I'm going to do the portfolio breakdown, so I don't want to jump into that. But in the 6 months that I've switched over to the system, a couple of things that have been a little bit easier on me, and this is coming through the bear market to now. During the bear market, one of the things that was reassuring was, like, even though the price was down, once I kind of identified what the local bottom was, in my opinion, which was around 65,000, like we were bouncing between 60 and 65. I didn't see us going too far below that. So I actually started stacking up on and shifting my portfolio back into my high conviction crypto stuff. That's the reason we have the Maro fund in here, MSTW, MSTY. The other funds the other narrative that we're following is the semiconductors, the technology, and semiconductor chips, technology. I'm not so much into AI specific from the company perspective, but like the data, the hard drives, the chip manufacturers, that's a really good one. I like the high volatility, the ulti, the remodeled ulti. That's been a workhorse for us as well. And yeah, that's kind of where we're sitting with that. The thing that I do like about this is it's a very leverageable portfolio. I could get more leverage if I had my growth mixed in with it, but I'm not really that worried about it in this scenario, because I do like this primary income portfolio being like a bedrock foundational portfolio. It will allow me to scale out into my redundancy portfolios. Now you'll see a lot of overlap with some of these portfolios, but I'll have income coming from different places and they'll be segregated out. So that way they'll be for specific uses. Like when we do the bill pay portfolio, I'll only have to draw from that portfolio to pay my utilities and bills. So that way, every time I'm doing that, that's what it's going to be. And, we'll scale it out a little bit a year. So this year, we have a goal of getting $10,000 over into that portfolio to start building up for next year to pay my phone bill. I'll have a good cushion once it starts paying the phone bill, and then we'll roll the excess over into something else once we are ready to deploy that, which is I'm excited about. The Robinhood portfolio will be home base for my daily driver, daily spending. While we're building that up, because that's going to be a heftier portfolio, it's going to be probably around $1,000 value, which will be, half of what this one's making. It probably won't make probably $1,000 to $2,000 a month for just pocket change BS money, which is I'm like, if you have that dedicated, plus we still have this primary income portfolio, which will then be used just to kind of machine gun down debt at that point until it's gone. And then after that, this portfolio will fund investments and growth in all the other portfolios. So that way the system is self-perpetuating. Like when we borrow money, we can go and expand those portfolios out, but this portfolio will pay that bill, like it's going to be, once the system's set up and functional, it'll be set up and functional. And the one thing that I have learned while doing this, being in this for 6 months, is these portfolios, once you break about $10,000, once you get that first initial setup going, it starts rolling fast. Like the compounding on these roll fast, especially if you're going fully invested and you're actively in that portfolio. Like this portfolio just started jumping up. And like, again, we were putting a lot of money in here during the bull market. We were managing positions during the bull market. One of the other deals that I learned is position size. Like, even though I'm not a big diversifier, I will diversify amongst the narrative. And position size has been a really big thing that I've had to learn, and I've run into the wall on that a couple of times because, for those of you who've been around a while, originally this channel was basically just giving updates on a really fat holding of msty, and that was the only thing that I had. And, I got out with a 20% total gain on the position, but I rode that down a lot further than I should have looking back. Just is what it is. So it was also my only holding. So I had nothing else going on. There was no stability. There was no nothing. It was just one position, msty. And it was paying well and it was growing. And I felt really good about myself. And I thought I was a genius. And then obviously bear market pullback, market retracement, you get to eat the other side of that too. So that's one of the things that I have where it's like my whole entire portfolio isn't red or isn't the same amount of red. Like we have a lot of pretty metrically stable things in here like STRC, QQQY, which is diversification. We've got Chippy, we've got Semi, which is a workhorse of it in and of its own right. But Chippy has been amazing. The semiconductor portfolio option income ETF from yieldmax, amazing. It's going in most portfolios. Like there, honestly, I've scooped profit off of this. Like it is crazy. Like I've reallocated profit out of this to get my Mero position up to where it needed to be. We've been buying other positions off this, which is also a little bit crazy. I love it, but it is what it is. It's a workhorse. Like that's probably one of my better buys so far. And obviously going into a bull run, but even when we were in the bear market and prices were down, it wasn't that bad. It really wasn't that bad. Like this is something that like market dip, I'll buy it. Because the market come back, unless we're not using semiconductors anymore, it's going to come back. Like that's one that I do like. It's kind of a Swiss Army knife. It doesn't yield as high as some of my other positions, but this is going to be my first $10,000 position in my bill pay portfolio because it's going to pay well. I can split between STRC in this position, and while it's expensive, yes, it's not too expensive. Like I'll take the 10,000 in that and set it to drip and just leave it until next year and call it a day once we get to the 10,000 and just drip it the whole way up. I'm trying to think what else this would have. We know we might have to do a live on this one because I like fielding these types of questions because like this system, I don't see anything that's more efficient, to be honest. And it's something that you can do with low, decent income. It scales. It's just the amount of time before the compounding takes effect and it gets noticeable. Because like this portfolio right now, we're sitting at what market value of $62,613.33. And we're pulling on average about just at $4,000 a month off this portfolio because a lot of these positions pay weekly. Yeah, like that's not too bad. And then as we grow, we can grow that income. And I've done this I would have to go back and see what the amount was when we started. But since going fully invested, this thing has just been barreling forward because you're constantly buying. And then, we're adding more stability into it as we get to the end of the portfolio and everything's all good. That was the other thing that I wanted to touch on was the portfolio. Well, we talked about the portfolio structure and the position size, but the importance of having the boring, you're not getting a whole bunch out of this, but it's within the narrative. Obviously, energy infrastructure, TYG is a big one. STRC, for me, it's the most boring thing I buy. And I buy it regularly. I consider it my cash reserve. Like if something really popped off and we had a black swan and I had high conviction that something wasn't going away and we were at the bottom again, this position is something where I'm like, hey, this is basically just cash. And it's paying 11%, which is, high yield for a lot of people. But for me, this is a checking account within my account. It's very important to have those positions because when everything's going bedlam, that's normally where it's supposed to be. Like, so the whole portfolio isn't teetering and rocking and going crazy. The one thing that I will say, having done this is not for everybody. It's not. And the reason I say that is because if you're not financially responsible, this is not going to help you. Like this won't. It just won't. Like this isn't a be all end all. This isn't a Dave Ramsey plan where everybody can do this. So I think everybody can start with the Dave Ramsey plan. And it's better than nothing. This you have to be financially responsible for. You have to be good at capital allocation. You have to be good with money. You have to be really interested in how money works. Like this is the stuff that separates the men from the boys, if you would. Because anybody can go out, you can day trade, you can talk about every penny stock that comes up and try to get rich next Tuesday. And you're going to be gone in a year. You're not going to be here in 10 years. You're not going to be here in a decade. You're not going to be here in probably as soon as the market goes down, because when everything's down, people don't like to talk about the market because it's going to be really hard for you to make money. You'll be talking about shorts, but nobody's going to know that you blew your account up because you don't show your accounts. Just as what it is. Like let's call a spade a spade. You ain't got to lie to kick it. This is something of a higher level because anyone can go and trade and get lucky and get some money. but can you keep it? Can you get lucky for, a decade? Can you do that? This system is for people who are financially tapped in, financially literate, do understand how money works, and understand and have an interest in capital allocation. Because that's what this is. This is just an ongoing strategy. It's like chess. And the thing that I love about it is you can take okay income and you can scale it to where you're making more than your take home. So I'm making more than my take home now. And then you can still go to work or you can not go to work. You can now have some agency over your position. You have some leverage. You have options. But if you decide to go to work, that puts you in what? Barista fire category. And now you're a 2-income household. Even if you go and get paid what you're worth doing what you're doing, you're a 2-income household now. Like if you stay exactly where you're at and you're still just making okay money, you're a 2-income earner. Now you have a whole additional income. Now, if you don't fumble the bag, that's the kicker, then you have a lot of optionality because you have 2 incomes. And one is taxed way less than the other. I don't pay as much on my distributions as I do on my W-2. The taxes are lower. That gives you an exponential amount more to invest, because if I wasn't currently paying off debt and I could just invest all of this, so there's no way I don't know how to spend all this extra money. I don't. Like me personally, I don't want to do a lot of things. I want to go skateboard. That's not that expensive. It's expensive up front, but to get the board that I wanted, the exact wheels that I wanted, some good skate shoes, couple of shirts and some pants that I'm willing to fall in, not that much money. I get to go be outside. I mean, at this point, with gas prices where they are, I spend more on gas than anything. Like, it's just, if I got to go somewhere, that's expensive. But it's not, I've got to choose whether I have gas or food because this is an inconvenience. But you know what's blowing up with the gas price and inflation? My assets. My income is actually going up. I'm getting an immediate raise right now because as the market goes up, I get paid more money. So, there's a few benefits there that are worth looking at if you're responsible. Now, if you're not responsible, you got to go find another lane. But as an option for somebody who's working, and if you enjoy your job, you just want to keep doing what you're doing, and you kind of want to get to a point to where, maybe you're making enough to, if AI comes and takes your job, you're still making money, then this is a play if you're financially responsible. Is it work? Absolutely. There's a lot of strategy that goes in. You got to know what's going on. You don't want to be in covered calls on something that's not going to be making any money. I mean, you'll make money. It's just a lot less. It's fine. If you can't look at red numbers, you probably don't want to do this. Like, you have to make money a thing. It's an actual, just a tool. And once you make that tool what it is, a tool, then you can start manipulating your finances. This gives you some ability. But no, I don't think it's for everybody. I think it's right up my alley, and I'm happy I found it. And we're going to close off on that. It's been about 30 minutes of me ranting, raving, and wandering off talking about my experience, my 6 months, and being fully invested. And, so far so good. We'll probably do another update in another 6 months, obviously with receipts, and see where we're at. There is one more receipt that I wanted to show. Hold on a second. Let me get up. Get on out of here. No, too big. There you go. There is one more thing that I wanted to pull up on here. Let's see here. I want to pull this up just for the so for 2025, I don't. So 2024, I made $13,000. This is when I started building this portfolio, just for reference. 2025, I made $33,389.43 with a monthly average of $2,782.45. Now this they're still not good at estimating the income because like I know I'm going to be making more than this. But because this has me at an average, like we've already made $13,000. It's just this is not Schwab is the worst at projecting out what you're going to get, which is why I personally use Snowball Analytics, which here, share this tab. I'll go to dashboard. And we'll come down here. So the next 12 months, we're looking down the barrel of $49,553 as of my last payouts, with an average of $4,125.04 a month. Now, the reason I like this is this as I'm going fully invested, as I continue building this account up, we're going to kick this up a little bit more. So this goes up a little bit every month because you're getting the growth on what you bought, which is pretty awesome. So that's kind of the last thing that I wanted to show is like the compounding of this. Like when I started, first month was first year was $13,000. The second year, which was 2025, of this portfolio, and this isn't being fully invested. That was just me investing what was left. So I was investing as much as I could, but it was what was left. I was still paying bills out of my W-2 paycheck, and then trying to throw everything else I could into the portfolio. And then as it started producing a little bit of money, we could get like a bill here and there. You kind of like got to work your way into it. I didn't just wake up one day and be like, fully invested. I've got $40,000 money in here. Like I built this portfolio specifically from $0. I started putting money in it. And then I threw a little bit of money in there. And then once I was making $100 a month, I was like, oh, I'm going to take this seriously, and started kind of messing around with it, trying to figure out what was going on. And then I stumbled into the high yield dividend space. And then as I was kind of partially working my way, like, I'm building out the portfolio to where it can pay like a bill or two and help out, I stumbled into the fully invested ideology. And I was like, oh, that'd be interesting. And then a year later, I got to a point where I was like, oh, I'm going to try this. I'm actually making enough money to try this. This is actually paying a few bills now. But the compounding effect, obviously, I've had this portfolio running this way for 3 years now. We started in 2024. We've got into 20, and that's with me really prioritizing buying Bitcoin also, because like this was a side project. The side project has expanded. Is it going to be the only thing that I do? No. So I'm still going to buy as much Bitcoin as I can. So that's a foundational base layer for me. But is this something that's helping me get out of the workforce faster? Get out of having to go to work faster? Absolutely. Is it definitely providing some support for these ridiculous gas prices? Absolutely. Is it going to help pay for my EV that I'm getting? Because looking at these gas prices, I was like, you can only fool me once. $5 gas prices is crazy talk, and I'm paying $4.99 because I have to buy premium. Insane. If I want to go fast, I can go fast in an EV. EV goes faster than my car anyway. So that's a no-brainer. I was like, fool me once. You show me $5 one time, now it's real. It's real now. I don't want to pay $5 for gas. So it is what it is. Is it going to pay for my EV? Absolutely. And we're going to leave it at that. Thank you guys for those of you who stuck it out this long. I appreciate you. I will tap in with you next week for another bag talk, which is what this episode was. Don't forget to like, share, and subscribe. Hit me up down in the comments. Let me know what you guys are thinking. Till next week, it's your boy Reckless Ray Dinero, and I'm out. Peace.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play it, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.